Good morning, Rob. Thank you for accepting my interview invitation this morning. I'm Martine, a mortgage broker and certified Smith Manoeuvre professional. I'm the founder of ARC Mortgage, a mortgage firm driven by the belief of building wealth through strategic financial planning. The Smith Maneuver is a strategy that aligns perfectly with our mission to build wealth. I'm originally from the East Coast of Canada, where I earned a bachelor degree in social studies and communication, and I also have an extensive background working in finance and technology, which helped me streamline the mortgage process. Over the years, I've had the privilege to assist numerous individuals with their mortgages, and now I'm so thrilled that I have the ability to implement the Smith Maneuver strategy, which is the absolute game changer for my client. And today I wanted to interview you so you can tell us a bit more about yourself and the background of the strategy. So I will let you introduce yourself.
Yeah, well, thank you, Martine. It's a pleasure to be here. Thank you for asking me to speak to yourself and through you, your viewers. So yes, I'm Robinson Smith. I am a former investment advisor here in Victoria, BC. I worked alongside my father, Fraser, who developed the strategy, the Smith Maneuver, for about a dozen years. Excuse me. I sold my advisory a while back in 2018 because I wanted to get out to Canadian homeowners across the country about this financial strategy because it's tough out there and we've got a solution. And so that's what I'm doing. I'm spending a lot of time educating homeowners and working with professionals like yourself.
Well, thank you. Thank you so much for bringing it out there. I think it's great for homeowners, especially in the BC marketplace. Can you tell me in a nutshell, what is the Smith Maneuver?
Yeah, so the Smith Maneuver is a financial strategy which is designed specifically for Canadian homeowners, and it helps them accomplish a number of beneficial things simultaneously. When a homeowner implements the strategy, they're going to see a reduction in their tax bill. They're going to be able to speed up the elimination of that expensive mortgage, and they're going to be able to build an investment portfolio that otherwise wouldn't exist. And the nice thing about this is that it does not require any additional cash flow from the homeowner on a monthly basis. We see the typical advice from financial professionals when we finally go ask, how can we improve our financial situation? They say, well, max out your registered contributions, invest more in a non-registered account, make extra payments against your mortgage, pay out your credit cards, pay out your car loan. And the problem is that all of these typical strategies that we hear from these professionals require more cash from us on a monthly basis in order to accomplish these so-called strategies, or a reduction in lifestyle because we have them. So the nice thing about the Smith Maneuver again is that it does not require additional cash flow from the homeowner. We're simply using the cash that we're outlaying anyways. Got a mortgage, we're making a mortgage payment, we're just going to restructure our finances to see all these benefits which start now, they increase exponentially over time. And the fundamental requirement to implement the strategy is the right type of mortgage. And this is where you, Martine, come into play as a Smith Maneuver certified professional. We need the right type of mortgage in order to be able to implement the strategy. And when we do have this type of mortgage, we're able to access the equity as fast as we're with just our regular mortgage payment. And then we can access this equity to invest. And because we're using these funds to invest, we get the deductress on that bond. And this tax relief subsequently enables us to make extra payments against the mortgage, therefore getting rid of it fast. And the nice thing about this is we're investing each and every month. So we're building up a retirement portfolio, an investment portfolio, and we're taking advantage of compound growth. And that's why we're receiving these tax benefits. It's why we're able to get rid of our mortgage. It's because we're investing for our funds that we didn't have.
This is truly the beauty of the strategy, is that the homeowner is already committed to this mortgage payment. And so for me to realize that they can use what they already committed for, not additional money, and then build wealth from it, was what kind of got me into signing up for the certification. Yeah. Now, what is the origin of the Smith Maneuver?
Yeah, as I think I mentioned earlier, it was developed by my father, Fraser, back in the mid-'80s. He was a financial consultant in Vancouver, and he did a lot of research, thinking about how he could help improve the lives of Canadians. And he came across the fact that the Americans can deduct a good portion of their mortgage interest, but we Canadians could not. Of course, he didn't think that was very fair. So he read the Tax Act and put a bunch of pieces of the puzzle together, a few pieces from the tax side of things, investing, mortgages. And so he came up with this strategy. And he put his private clients into this strategy for about 15 years before he retired in 2000. And he retired to write his book, which came out to, a few years later. He came back into advising in 2005. He wasn't one for sitting around the house. So in Victoria, he started up again 2005. I joined him in 2006. I was living in China at the time. I came back to work alongside him. And so we were doing strictly Smith Maneuvers for our client. My dad passed away in 2011, but I kept advising until about the middle of 2018 when I sold my practice because, again, as I mentioned earlier, I wanted to focus on getting word out to Canadian homeowners because it's so tough out there. It keeps on getting tougher. So I wanted to make sure that Canadian homeowners across the country really knew that there was this strategy available to them. And alongside that, I wanted to train financial professionals like yourself to make sure that these Canadians were implementing the strategy correctly.
As you mentioned, it's tough out there for Canadians. Why do you think Canadians do need this strategy to help them?
Yeah, there's a number of different reasons, and we can start with taxation. We Canadians are consistently within the top 5 highest tax-paying citizenry of the planet. Close to half of our total income goes to taxation of various sorts. We pay more in tax than we do on food, clothing, and shelter combined. These are the 3 simple requirements for survival, and we pay more in tax than all of those. We've always been experiencing inflation. Recently, it's high down time, but inflation's always going to be there, and that eats away at the value of the equity in our home, putting it to work. And another challenge we Canadians face is not only do our expenses get more and more expensive dollar-wise, but as we move through life, we incur more and more different types of expenses. We're single, then we're married, then we buy a house, kids, right? So life just keeps on getting more and more expensive. And then we throw in the cost of housing. 36% of our income after we pay tax goes to housing, and that's going up. And because of all these expenses, taxation, inflation, housing, all of this, we have an inability to save for our future. We have an inability to put money aside for the fact that we want to retire someday. We Canadians have these 2 very pressing financial goals. One, we want to get rid of the mortgage as fast as we can because it's expensive, takes a lot of paper. And the other is we want to save for our retirement. But the decision on which of these 2 goals to approach is made for us, not by us. Because if we do not take our cash and invest for our future, absolutely nobody cares. But if we do not take our cash and put it towards a mortgage, somebody does care, right? They're going to come knocking on our door. Hey, you got to make your mortgage payments, right? Plus, we've been raised by being told by someone older and wiser than us, maybe it's a parent or an uncle or an aunt or whatever, you need to be mortgage free by the time you hit.
Yeah.
And so that's what we do instinctively. We apply our resources, our financial resources towards the mortgage at the expense of not investing for our retirement. And that leads to a lot of potentially bad places, being financially reliant on our children. There are articles out there, increasingly so, about retirees being reliant on their children. Maybe we have to get a job. Maybe we have to sign up for a reverse mortgage. Any number of things. Work in a big box store, right? You go into Walmart or Costco, you have a look around. There's a lot of senior citizens working there, and they're working there because they have to be, not because they. So the Smith Maneuver solves this problem. It's not, do I focus my money on the mortgage or do I focus my money on investing for my future? It allows the Canadian homeowner to do both simultaneously.
This is truly a great strategy for any homeowners. How much is the strategy worth to a Canadian homeowner in average?
Yeah, generally we're seeing, the plain Jane Smith Maneuver, the most basic core strategy. That is worth, over the course of a typical 25-year amortization, maybe $300,000 to $400,000 of net worth improvement to a Canadian. And instead of having 25 years to pay off that mortgage, it's maybe gone in 22 or 23. So it'll take a few years off the amortization. So we're increasing your net worth. We're getting rid of that mortgage faster. And again, no new cash is coming from your pockets on a monthly basis. But there are a number of accelerators that are available, and every Canadian has the ability to take advantage of at least one accelerator. And we're seeing net worth improvements close to or over $1 million over a typical 25-year amortization. And instead of 25 years required to pay off that mortgage, it could be gone in less than 10 years.
Wow. So can you explain some of those accelerators that can help a homeowner take their mortgage from 25 years to 15, 10 years?
Yeah, so there are 5 accelerators. There's the debt swap, cash flow diversion, cash flow dam, the drip, the prime, the pump accelerators. And just using the debt swap as an example, let's say as a Canadian homeowner, I'm fortunate enough to have $30,000 saved up. Maybe it's $300,000, whatever it is. But let's say it's $30,000 in an investment portfolio. Let's just call them mutual funds, could be NEFs, whatever. But after I talk to you, Martine, and get the right type of mortgage so that I can implement the strategy, what I can do is I can redeem that asset that I have, those mutual funds, for cash, $30,000 in cash. I can make a payment against my mortgage. Because of the type of mortgage you put me in, Martine, I can access that equity that I've just created. I can pull it back out and buy the exact same investment that I just redeemed 7 days, 10 days. So I'm still invested by that $30,000. I still have the same debt, but I've reduced my non-deductible debt by $30,000, increased my beneficial tax deductible debt by that same amount. And that does great things to my tax bill. Right? I see a nice refund. And because I'm making that extra payment, that non-deductible expensive mortgage debt is gone.
That's great. I have a lot of clients that have investment properties. Can we use the Smith Maneuver on investment properties?
It's kind of a yes and no on that. And the no is because the Smith Maneuver is a debt conversion strategy. You're going to see all these nice benefits of tax deductions, getting rid of your mortgage faster, building up an investment portfolio because you are converting debt, bad debt to good debt, non-deductible mortgage debt, fully tax deductible. And when we have borrowed a mortgage to go buy a rental property, that mortgage interest is already tax deductible because the rule is in Canada, if you borrow to invest with the reasonable expectation of generating, you can deduct the interest borrowed. So we have borrowed to buy a rental property, which is a business. And I do expect revenue income from that business, the rental receipts. So the mortgage interest, the expenses on that rental property are already tax deductible. There's no debt to convert. We do not need the Smith, there's not convert. However, investment properties can greatly speed up the benefits, talking now of the accelerator that you're going to see with your Smith. And another accelerator that I mentioned is prime the pump. And so if someone comes to you, Martine, because they want to implement the strategy, you get them out of the mortgage that does not work for this into one that does. And maybe they have significant available funds that they can pull out of their house right away. Maybe it's $10,000, maybe it's $100,000, maybe it's $1 million. And if they use this available equity to purchase their first rental property, for example, they can deduct the interest on that borrowing we just discussed. But now, and so they've primed the pump. They've right off the bat, they've bought an asset which is going to increase in value over time. It's going to improve their wealth. Big chunk that they're getting invested right away, meaning it has longest period of time and values their wealth. So they've used the prime the pump accelerator in this case. Now they got some renters, their rental property, and they can implement the cash flow down. And what that entails is, well, typically if a Canadian goes out and gets a rental property, they open up a bank account. It's dedicated to this rental property. The rental revenues go in and the expenses on that rental property business go out. So cash flow neutral example, $3,000. Yep. $3,000 in rental receipts in, $3,000 out. But with the cash flow down, what we can do is we can direct those rental revenues against our own mortgage, the mortgage against the house in which we live. Big, expensive, non-deductible mortgage debt. It's killing us. So we take our revenues, $3,000 each month, an extra payment above and beyond our regular. And when that $3,000 becomes available again, thanks to the mortgage you put this client in, they can pull it out and then service the expense. So the money's coming in from the renters and it's going out to service the expenses on that business. But first, it's paying down your expensive non-deductible debt and creating additional tax deductible debt. And this is where we see net worth improvements of $1 million or more, and a 25-year mortgage, that non-deductible debt gone 6, 7, 8, 9.
This is great. It makes the purchase of investment properties even more affordable for current homeowners.
Absolutely.
Now, what is keeping you busy these days?
I'm spending about this strategy, doing a lot of speaking engagements for personal finance groups or real estate investment groups, and also helping train up, mentor, and assist people like yourselves, professionals who have gone through the Smith Manoeuvre Certified Professional Accreditation Program, to ensure that Canadians are being helped correct. There's just a ton of misinformation out there on the strategy. There's a lot of financial professionals who say they're going to help you with this, and they do it wrong, either a little bit wrong or a lot.
Yeah,
that's no good for anybody. So that's what I'm doing. I'm doing speaking engagements and education and training up financial professionals to help strategy.
And now I haven't really heard any banks talking about this. Is this strategy legal?
Yes. As I mentioned, my dad developed a strategy back in the mid 80s. He wrote a best-selling book on it. Oh, and look, I just happen to have a copy here. There you go.
Always beside me.
Yeah, I came out with this in 2019, another bestseller. So if it was not legal, there would not be 2 best-selling books on the strategy. There would not be a nationwide network of financial professionals mortgage brokers, investment advisors, accountants, insurance brokers, realtors, helping Canadians implement the strategy. My dad used to love to tell the story. This is years ago. He says, "Yeah, I was just in the office one day, and my assistant pokes her head in and says, Mr. Smith, there's two agents from the CRA, Canada Revenue Agency here. They'd like to talk to you about the Smith Manoeuvre." So Dad said, "Come on in, have a seat, guys." Right? He got out his pen and paper and he went through the strategy and explained it, how it worked, why it worked. And he says, yeah, and halfway through, one of the guys leans forward and said, "Would this work for a $70,000 mortgage?" So, and in fact, both my father and I have put CRA employees into the strategy, police officers, lots of judges, lawyers, Canadians of all walks of life.
Wow. What should Canadians who are interested in the strategy do next?
Number one is contact you, Martine. We've got our website, smithman.net. We've got a bunch of resources there, but really anyone who's interested in learning more should contact you, Martine. You're a Smith Manoeuvre certified professional. You've gone through the training. You're a member of the network, and you've got access, as a Smith Manoeuvre certified professional mortgage broker, you've got access to SMCP, investment advice, tax professional, all these different types of people that a Canadian should surround themselves with in any event, whether they're doing the strategy or not. You have a team of professionals who actually know exactly what they're doing in their realm. So we've got all these different professionals specifically trained in the Smith Manoeuvre, and you've got a network that you can really surround your client so that the client doesn't have to educate their accountant what they're doing, doesn't have to educate their investment advisor. All you professionals know exactly where the client's goals are efficiently. So first step, give you a phone call, send you an email, Martine, and away the races.
Thank you so much, Rob. I will mention that it is a bit of a complex strategy for someone that is hearing about it for the first time, but we can take it step by step. Like you mentioned, we have a lot of certified professionals in accountants, financial advisor, mortgage broker. We can help a homeowner into looking at this strategy specific for themselves. So I'm looking forward to help a lot more homeowners build wealth and be independent for their retirement.
Yes, and the nice thing is for people just looking into this is you can start real slow.
Yes.
Right? You start real slow. As long as you have the right type of mortgage, again, which is where you come in, Martine, get that financing and then take one step at a time. And you can build the accelerators in. You want to slow down, you take some of the accelerators out for whatever reason. I don't know. But, that's the nice thing about it. It's very flexible. It's very robust. But you're the first stop, Martine.
Yes, I am. Thank you so much for your time, Rob. I really, really appreciate it. And I'm sure we'll talk again very soon.
It's been my pleasure, Martine.
Okay.